Hello. So, how are you doing? I came on here to basically go over the buy-in presentation with you virtually, but like we're meeting in person. So, I'm going to go ahead, share my screen, and get started. All right, let's get started. So, I'm Jasmine Christian. I have been in real estate for what feels like forever now. Um, Here's my contact information here, and hopefully, I'll be helping you find your dream home. I was born and raised in Hampton, Virginia. I do service to 757 and surrounding areas, so I'm very knowledgeable about the area. I have one child, she's 2. Her name is Eva. And prior to this, I was a store manager at Victoria's Secret. I worked in retail for about 9 years, so I'm all about the clientele experience. Here are some of the core values that Chantel Ray stands on. We're formerly known as Chantel Ray. Now we are Canzel and Corporate Realty Group. So the buyer's roadmap is what we're going to go over today. You first meet with a real estate professional, me. Then you get pre-approved with a lender. I can recommend you lenders. You can search for homes. Then you're going to make your offer. We're going to negotiate, go through the contract. Then we'll be going in escrow, handling those final details, and closing day, handing you those keys. So let's get started. You first want to meet with your real estate professional. So thanks for again choosing Canzel Realty during your home search. We are a company that prides ourselves on our morals and our goals and our fiduciary duties to our clients. So I think that it's very important that you pick a real estate agent who's going to value what you value and also fight for what you want. As your agent, my commission isn't paid through you. My commission is actually paid through the seller. So I'm definitely here to represent you and help you through your transaction. The only representation cost from me is going to be an administration fee to process your paperwork. So, knowing what you can afford is crucial in trying to get a home. It is very crucial that you go ahead and get pre-approved. I have lenders that I know and trust, so I can definitely recommend a lender to you. You can go through your bank, but I recommend a lender only because they deal with mortgage loans day in and day out, as versus a big bank like a Bank of America or Navy Federal who process all types of transactions, while a mortgage lender actually just deals with mortgages. A mortgage lender is going to need pay stubs, W-2s, bank statements, proof of employment, etc. They want to know that you're going to be able to pay your loan back. So they're going to need proof of employment, especially if you are an entrepreneur. You definitely need 2 years of tax returns. Why you should get pre-approved. It pinpoints a price range that you can shop at. If you're not pre-approved for $300,000, you can't look at homes that are $300,000. So you need to know what you can look at. You might be lowballing yourself and looking at 150K homes when you're really approved for 250K. So you need to know what you're pre-approved for. It also narrows down the neighborhoods that you should consider, i.e. the price range, and it makes you look good to the seller. You're coming to the table with money. You don't have to go out and try to get money. Right now, we are in a seller's market. So trying to get your pre-approval after you've already found the home you want is kind of crazy to even consider. You definitely want to have money in hand before you go searching for a home. And again, that will speed up the buying process. So we're going to search for homes. We'll look for your location, your price, what styles you want, what features, how many bedrooms, how many bathrooms, fenced in, garages, things like that. After that, we'll decide if you want a single family home, a condo, or a townhome. Single family, of course, you do have to do your yard work. Condo, no yard work, but less yard or possibly no yard at all. And same for a townhome. So, reasons why you should buy a home. What is equity? Equity is your money. So, your home's value minus what you owe on your home equals your equity. So we often say buy a home, stop paying rent so that you can build equity, you can buy what you want in the future. Well, your equity comes from your home's value. So let's say your home is valued at $200,000. You owe $150,000. That means you have $50,000 in equity. That is your money. So if you were to sell your home, which wouldn't be advised, you would get $50,000 from that transaction. You can put that toward whatever you want. It's your money. Your home's value can be roughly determined by an agent, which is me, and that's going to be called a CMA, which is a comparative market analysis. While your true value of your home is going to be determined by an appraiser, and an appraiser usually costs $400 to $500 to get that appraisal done. Can't talk tonight. So there are many ways to increase your equity over time, but a few ways are going to be: one, make a big down payment. The more you pay initially, the less that you owe. And remember, your home's value minus what you owe equals your equity. So the less you owe, the more equity you have. Also, focus on paying off your mortgage. So focus on lowering your principal. Pay more than the minimum owed. So chip away at your balance faster, and that is going to give you a higher equity. Also, renovations, spruce the place up a little bit, add a deck, add a garage, add things that are more modern and style for the time, or things that kind of match the neighborhood, neighbors' houses, if your home isn't as up to date. And also staying in the home longer. So your home's value will fluctuate, and staying in the home longer gives you a better chance at seeing where your home's value will increase most over time. Because your home can lose value, or your equity can be less or lower. If your home's value is lower than what it was, say, a year ago, your equity is going to be less if your payments aren't matched, if your home's value is decreasing faster than you're paying off. So your home's equity can be lower. So staying in the home longer during those low periods and waiting for your home's value to pick back up will definitely be in your best interest. The real price of rent, you probably already know, but let's say you paying $1,000 in rent, then you're paying $12,000 in rent over the year. That's $12,000 that you could have put toward a down payment toward a home that you would be building equity in. So it's always something to consider. Sometimes we might need an extra year to rent to get ourselves together, or maybe an extra 6 months, or maybe putting ourselves on a month-to-month program and then going ahead and getting into our home. But we definitely want to be working to getting out of that renter situation and just building our equity. I can show you any house that you see. So if you see a house that it says Keller Williams on it, Caldwell Banker, I'm not sure, Howard Hanna, any other company, I can show you that house. You just let me know where the house is, the address. I will look up that house, make sure it's not under contract yet, and we will go schedule a showing so you can see what that house is like, so we can move very quickly during your process. A huge mistake that a lot of buyers make is looking on Zillow and Trulia. The only problems with Zillow and Trulia are that they don't update as fast as my website or realtor.com is. So if you must search elsewhere other than my site, try realtor.com versus a Zillow or a Trulia, because realtor.com updates just as quickly as the MLS does, and that's going to be the multiple listing search system. And that system is actually where all the houses that are for sale are updated on. When they go under contract, that system is updated. Zillow's system doesn't update as quickly as the actual MLS or realtor.com. So you want to use my site or realtor.com to search for houses so that you can get the most up-to-date information and you're not looking at homes that might already be under contract. I do recommend that you do community drive-bys once we find a house that you love so that you can see the neighborhood. You might want to drive by during time that you maybe get off work or that you're busiest most or that you're, running around so you can see how traffic is around that area. Up front, there are going to be some costs. So your earnest money deposit, you can deposit around $500 and up. In a seller's market, people are giving way more in earnest money deposits, $1,000 and up. But it's really up to you. Earnest money just shows the seller that you're serious and that you want the house. Earnest money does go towards your purchase price of the house. A home inspection costs around $400. I recommend you get a home inspection even if you get a new construction home, because builders miss things throughout the years. You might not notice something that a home inspector will notice. So definitely want to get a home inspection so that you know what's going on in the home. And an appraisal, like we talked about before with equity, an appraiser is going to tell you the true value of your home and the home that you're trying to get. So you want to get an appraiser because we need to know what the value is of your home before you step into it. We want to make sure that we're making the right decisions. One of the biggest jobs is to make sure you don't overpay for your property. So I do a market analysis to make sure that you don't overpay for your property. But again, that appraiser is going to come in and tell you the true value of the home. So once your offer is accepted, we found the home you love, your offer gets accepted, you both agree to each side of the contract and the terms, we give the earnest money to the title company. We get that earnest money in 2 days. So if your offer is accepted on a Tuesday, we need to have your earnest money check that you promised your seller into the title company in 2 days by that Thursday. Then we're going to go ahead and schedule our inspections and repairs, schedule an appraiser. We're going to go ahead and get our home insurance, finalize any mortgage details with the lender, and then we will do a final walkthrough of the home after any repairs are made from our inspections, if there are any that need to be made. Again, we'll do our inspections, mortgage approval, home appraiser, and if there is a homeowners association, we'll go ahead and finalize all that paperwork as well. So you have this contract, you agreed to it, we love this home, but what if we want to get out of our contract? Are there any ways? Yes, you have three exit strategies. One is going to be inspections. So you're going to get a home inspection like I recommended. Also recommend a termite moisture inspection. You don't want to move into a home that might have wood damage or water damage. Lead-based paint inspection is up to you if your home is built before 1978. And then a pool inspection is recommended if there's going to be a pool in your yard. If something comes back that you don't like in the inspection, you have 5 days to come back and say, no, not going to go through with this. I want to pull out. And then you will be granted your earnest money back. If you wait till after the 5 days, you may not be able to get out of your contract, or you will lose your earnest money deposit. The second way to get out of your contract is through a mortgage approval or an appraiser. If the appraiser comes back and let's say the house was set at $200,000, the appraiser comes and says it's only worth $180,000, you have the choice to walk away if the seller doesn't want to reduce the price to the appraisal price to the $180,000. You could pay the difference, the extra $20,000, but I do not recommend that. Remember, when we're working toward equity, we want to make sure that the home's value versus what we owe is at a good level. So if we're coming in paying over $20,000 of what the home is owed, we're negative in our equity. So I do not recommend that. Also, the seller may not want to lower the price to the appraiser price, and that's where you have the opportunity to go ahead and walk away without penalty, and that penalty would be your earnest money deposit. So you would get your earnest money deposit back. The third strategy is going to be that homeowners association. So if the home that you loved ended up being in a homeowners association, you have 3 days after reviewing the documents sent from the homeowners association to determine if you still want to live in that property. If you do not make a decision within those 3 days, we're an assumption that you agree with the packet and you will be under contract. If you want to get out of it, you can get out of it 3 days after, within 3 days of reviewing those packet. So final details, we'll finalize your loan, review final documents, and then we'll go over any more findings that happened during the inspection. And then we make it to closing day. So this is where we do our closing paperwork. You want to bring your identification, anybody who's going to be on the contract, and then your certified check or your down payment and closing costs. We do have preferred partners for anything that you're looking for, whether it be painting, home warranty, interior design, lenders. We have recommendations for all. Trust these people. I work with these people on a regular basis, so they are people that you can trust as well. Online transaction management is great. It's awesome. You can do e-signatures. We never really have to meet in person other than showings. And they even have virtual showings now. So it's pretty cool that we can do online transaction management. If you are a hard copy kind of person, I can make that happen for you as well. I am very flexible. Our loan option programs that work best are going to be the FHA, the federal housing loan. That's going to require you to do a 3.5% down payment. And that down payment is on the purchase price of the house. So 3.5% of, let's say, a $20,000 house would be your down payment. For a VA loan, you actually don't have any down payment. So if you're military, former military, see if you qualify for that VA loan, you don't have any down payment at all. Of course, you want to build equity, you do possibly want to make a down payment, but with a VA loan, you are not required to make a down payment. Then you have your conventional loan. Those loans, you can do a loan, you can do a down payment for as low as 5%. So really cool with the conventional loan. Lastly, we sign a buyer broker agreement. So in some states, until a buyer signs a buyer broker agreement, the agent they are working with is legally committed to representing the seller of the home. Signing this agreement ensures that you have a real estate agent legally committed to representing you. So this agreement just says that I'm your agent, I work for you, and nobody else works for you. Otherwise, that's all I have for you today. Hopefully I wasn't rambling too fast. Please let me know if you have any questions. I am here for you. That's going to be it. And thanks for tuning in with me today. I will see you next time. Bye.